Google just agreed to pay nearly $1 billion every single month, not to a chip manufacturer, not to a cloud giant, to a rocket company. On June 5th, 2026, 1 week before SpaceX is set to go public on the NASDAQ, an amended SEC filing quietly revealed one of the largest compute contracts ever signed. Google will pay SpaceX $920 million per month, starting October 2026, running through June 2029. That's roughly $32 billion total for access to 110,000 Nvidia GPUs sitting inside SpaceX's data centers. And if you think this is just Google buying server time, you're missing the actual story. Welcome to Fund AI Mentals. Let's go through exactly what was filed. The agreement was entered on June 5th and disclosed in SpaceX's amended SON registration statement, the document companies submit before an IPO. The deal gives Google access to approximately 110,000 NVIDIA GPUs, along with CPUs, memory, and supporting components hosted at SpaceX-operated data centers. The full monthly rate of $920 million kicks in October 2026. Between now and September, there's a ramp-up period at a reduced fee. If SpaceX fails to deliver the committed number of GPUs by September 30th, Google has a 1-month grace period before it can walk away entirely, or accept whatever capacity exists with a proportional price cut. After December 31st, 2026, either party can exit with 90 days' notice. Google confirmed the deal publicly. A spokesperson described it as a short-term, timely agreement to ensure we have bridge capacity to meet surging customer demand for its Gemini enterprise AI platform. Google also holds roughly a 5% stake in SpaceX, a position that dates back to a 2015 investment, now worth north of $100 billion, based on SpaceX's current IPO target valuation. So Google isn't just a customer here. It's also a shareholder cheering for the IPO price. This deal follows a similar arrangement SpaceX struck last month with Anthropic, a $1.25 billion per month agreement at the Colossus One facility in Memphis. Between just these two contracts, SpaceX is now generating recurring compute revenue that analysts have noted exceeds the annual run rate of many major cloud operators. Now that you know what was signed, let's talk about why it was signed on June 5th and filed the same day, 1 week before pricing. In investment banking, there's a concept called revenue quality. It refers to how predictable, recurring, and defensible a company's income stream is. High-quality revenue gets valued at a premium multiple. A one-time launch contract is low-quality revenue. A 32-month, $32 billion compute lease with Google is extremely high-quality revenue. SpaceX's SON showed $18.6 billion in 2025 revenue, but also posted a $4.94 billion net loss, largely because absorbing XAI brought significant operating losses onto the balance sheet. For a company going public at a $1.75 trillion valuation, that's a question investors need answered. The Google deal answers it. It signals to the market SpaceX has found a way to monetize the infrastructure it built for XAI, and it's doing so with a counterparty that is also one of its shareholders. When investors read that filing, they're not just reading a customer contract. They're reading a proof of concept for SpaceX's new business line, AI cloud infrastructure, dressed in the clothes of a routine disclosure. Here's where it gets more complicated. The compute that Google is leasing was originally built by XAI, which Musk merged into SpaceX in February 2026. That infrastructure was designed for one purpose: training and running Grok, Musk's AI model, in direct competition with Google's Gemini. So the question worth sitting with is, Why is Google paying nearly $1 billion a month to a company whose AI model directly competes with its own? Google's answer, through its spokesperson, is capacity. Gemini enterprise demand is outpacing what Google's own infrastructure can absorb right now. Alphabet has committed more than $180 billion in capital expenditures this year alone. The problem isn't budget. The problem is that building data centers takes time, and GPU supply is still constrained. Google described this deal explicitly as a bridge, temporary capacity, while its own build-out catches up. That framing matters. It tells you this isn't a strategic partnership. It's a procurement decision made under pressure. Google needed chips fast. SpaceX had them, price and timing aligned. But there's another layer. Musk built an AI company. That company needed capital. SpaceX absorbed it, took on the losses, and now leases the hardware to Google, Anthropic, and potentially others. The AI division is still losing money, $2.5 billion in operating losses last quarter alone. What the compute leasing business does is partially offset that burn with high margin, contracted revenue. The infrastructure SpaceX invested $7.7 billion in last quarter isn't just for Grok. It's becoming a revenue center in its own right. There's one clause buried in the Anthropic deal, and likely mirrored somewhere in this one, that deserves attention. Musk reserved the right to reclaim compute capacity if the AI models running on it are deemed to harm humanity. That kill switch appeared in the Anthropic agreement. Now apply that logic to Google. Google's Gemini models are now competing directly with Grok on the same infrastructure Musk controls. And after December 31st, either side can exit on 90 days' notice. What that means practically is that SpaceX's most powerful leverage point over two of its biggest AI competitors isn't pricing, it's access. The contract can end. The GPUs can be reallocated. And the definition of harm is unilateral. That's not a hypothetical risk. That's a structural feature of these agreements that any serious investor running due diligence on SpaceX will have to price. Google needed compute. SpaceX had it. $32 billion is what that desperation costs at current GPU scarcity levels. The timing was no coincidence. Filed 1 week before IPO pricing, dropped into a document that will be read by every institutional investor looking to buy into this offering. SpaceX isn't just a rocket company going public. It's positioning itself as the landlord of the AI infrastructure arms race. The question isn't whether that's a smart business. The question is who controls the lease. Follow Fund AI Mentals so you understand the mechanics, not just the headlines.